Now, South Africans are bracing for tomorrow's 2025 national budget speech for insights on the country's economic trajectory. Post the State of the Nation address, the nation will be seeking clarity on the government's fiscal priorities and implementation strategies for addressing South Africa's economic challenges. For a look ahead to the budget speech, Ashburton Investments' head of fixed income, Botha, joins us. And now, thank you so much for your time, Albert. Now, this, I'm sure, is going to be quite an interesting budget, considering that it is the first big one under the government of national unity. What do you expect to characterize this budget in this time with this kind of economic backdrop that we are in?
Thank you for having me. So, you're right. This is the first budget in a while that is coming in an interesting situation. In fact, it's the first budget in 80 years that's not going to be able to be passed unilaterally by the ruling party. Wow. So I expect one of the things we are likely going to see is that there will be maybe a little bit more room for negotiation between the various parties. What form that takes will remain to be seen. We remain in a bit of a tough set of circumstances globally. We've luckily seen bond yields come down, which helps. But it is a difficult challenge for the finance ministry to walk. There's not a lot of room for tax hikes, and there's quite a lot of demand that he effectively keeps a lid on spending and maybe talk about some fiscal anchors, etc.
You talk about the bond yields, and actually what I wanted to ask is what the bond market will be focusing on in this budget. Is it all about those debt ratios?
So they focus on debt ratios, they focus on revenue and how much that's coming in. It's quite often fascinating when you're a bond manager, you're sitting at the office and you're happy about the budget, and you go home and you realize, oh, it's going to be a difficult budget from a personal perspective. I think what they look at is that they tend to look at what issuance is going to be, where it's going to change, potentially additional sources of revenue that the government might have identified. But the big issue for all South Africans is that we need to think about how we can grow the economy. We're at a stage where growth measures and these kinds of things are likely going to be the biggest focus that the market thinks about.
And let's actually talk about the level of our debt at this point. How worrying is it, particularly for the ratings agencies, and also just our debt outlook and also our capacity to be able to pay that debt?
So at the moment, you may recall the last rating action actually by a rating agency was just after the formation of the GNU government, when they changed the outlook from effectively neutral to positive. We didn't have a ratings change at that point. So one of the things that has come into focus is that at least the initial stages of the GNU is starting to be seen as more positive by rating agencies. Yeah. Our debt burden is higher than we would like, but if you think about 2020 to 2021, when they thought the debt to GDP numbers would turn around somewhere above the 90%, it's now expected to kind of peak at around about 75, 76%. So the last couple of finance ministers and budget speeches have managed to bring in those kind of expectations of a massive debt hike. We want to start seeing a plateauing, and that's going to take potentially the form where you want to start running primary surpluses. That's kind of a situation where you can see your debt falling. South Africa has been in that situation before. Specifically, some of the times at which we dropped debt to GDP the most was in the early and mid 2000s. when South Africa's debt to GDP numbers got down to below 30%, and effectively had interest rates that were only barely higher comparatively relative to US 10-year bonds. It's a long way away from that, but you want to get in a situation where things are effectively starting to look better. Trajectory at this point is very important for all of these rating agencies.
All right. Well, I want to go there to that top line, the tax revenue. There's been a lot of debate on whether we could surprise to the downside or to the upside compared to the estimates that were presented in October's medium-term budget. But a lot of the commentary that I've seen is that we are going to underperform. Some saying by 22 billion, some saying by 10 billion. And for me, that is a little bit surprising considering the fact that we saw on the personal income side, people's salaries are going up, of course, due to inflation adjustments, bonuses as well as the two-pot withdrawals. What's your gauge of that tax revenue right now?
I think it's likely that we might surprise to the downside a little bit, but I think we're being a little bit overly pessimistic at this point in time. So I think we can sit here and say, well, yes, you might undersurprise a little bit, but it's not going to be a massive number. We're talking about numbers of between 0.1% under or over on the other side. So it's not going to be a catastrophic miss. A bigger issue is going to be seeing how you move forward, what the minister says about kind of tax revenues going forward, and effectively what are the changes that they're implementing. You see where we can go from here. Specifically, things around the progression on the SOE side, what they're doing to combat some issues and some funding issues and operational issues at municipalities. All of those things, I think, are larger concerns than a 0.1% miss on effectively their budget forecasts.
I understand that there are no major tax changes expected on personal income and tax and corporate tax, but just some of the other things where Treasury could try and squeeze in more tax revenue going forward. What appears to be a given there, and maybe some of the things that he might bring to the fore?
So some of the things we always look at, for example, is the degree to which you see the bracket adjustments for personal income tax. That is, I think, something not a lot of people think about. Every time that the brackets aren't adjusted, you're effectively being taxed a little bit more, right? Some of the other things South Africans don't often think about is the fact that our capital gains taxes aren't linked to inflation. So the base cost of any assets you buy, whether it's shares or anything else, is not adjusted by inflation. So there's quite a few kind of taxes in that space that you kind of need to look out for, specifically on the bracket side. There's been some other calls for things that may or may not occur. I've seen it, as you have, I'm assuming, conversation around what might happen to VAT. It seems unlikely, because that tends to have an inflationary impact as well, because it lifts all of the prices in the country. Those are some ones. Sin taxes is always responsible. You very rarely see someone coming out of the media and saying, no, you shouldn't be raising sin taxes. So those are the interesting ones. I think it's going to be spread across a couple of buckets. And then Mr. Kieswetter has also said that he thinks there's a variety of places they can improve revenue collection via being more efficient and going after those people who are not paying their fair share in taxes already.
And any maybe relief expected from consumers? Because I know that in some spaces they try to say, okay, we've increased tax this way, but here's some relief. I've also been hearing that the chicken industry lobbying to be for chicken to be included in the food products that are zero rated for VAT.
So I think any kind of expansion of day-to-day goods that will alleviate some of the difficulties that average citizens has, things like, for example, chicken, eggs, those kinds of things, is generally always welcome. But quite frankly, we're not in a position to provide massive amounts of leeway. We are in a position where you have to be very, very, very careful. I think if when the budget finally does come out, the term balancing act will be mentioned quite frequently, because the minister is going to have to do a lot of that.
And also another thing I guess we will also be looking to sifting through there is what he does with the fuel levy. Albert, let's go into the SOEs, because you mentioned, a lot of people have been mentioning the challenges that Transnet has going on. Of course, there is a turnaround plan, but that turnaround plan does need money behind it. But of course, I do know that Finance Minister Enoch Godongwana has constantly said that he is implementing tough love on the SOEs. How much pressure is there on the finance minister to actually come out to show some love, maybe not as tough, to Transnet and other SOEs?
So I think it's being finance minister in South Africa has to be one of the harder jobs. We've the last couple of years, I think in many ways given that ministry a lot of responsibility in also partially caretaking other ministries, right? I mean, he's only supposed to be saying, what are we paying for, what are we not paying for? Effectively, what has been happening is he's been tasked with also some kind of reformist requirement, because it's one of the ministries that seem to be very competent at what they are doing. So I think what the minister is going to be doing, and what he has done in the last couple of years, is saying, I will help you if you do this first. Effectively attaching strings or conditions to funding. Open-handed and funding, I think, is a thing of the past. And it's likely that we're going to be seeing more of that, specifically when it comes to the SOEs. You will get your funding, but I need you to sort out your contracting around your port. You will get some more funding, but I need several contracts signed with various miners in order to effectively move resources on the rails. Those kinds of things, I think, is what we can expect from the minister. A little bit of give and take in both ways.
Albert, at the start of the conversation, we spoke about the economic backdrop, and that is not just domestically, but also globally. We do have some things that U.S. President Donald Trump has mentioned, also pausing aid to South Africa. Do you think, based on what is happening at the moment with geopolitical tensions, that the minister might be faced with new spending pressures in this budget, or would it maybe just be a little bit too early for that?
So the conversations and some of the things that have come up with President Trump has added a lot of uncertainty, right? Yeah. And uncertainty tends to be the enemy of markets and finances in general. The fact that we are uncertain as to exactly what's going to happen with something like AGOA, the fact that we are uncertain as to the continuation or not of PEPFAR.
Yes.
Those things are issues. Also, the US is our second largest trading partner. China is our largest trading partner. And while their economy is still doing okay, it's not firing on all cylinders like it did a decade ago. They're seeing a population collapse. So they're not requiring as many raw materials to build housing, etc. So there are a couple of things you can point to. Now, this is not to say that there's a massive global slowdown or recession. It's just not. Everything is not as hunky-dory as we would like.
Yeah.
And I think coming back to the situation with Trump, I think the one thing that people tend to say when it comes to him is to take him seriously, but not literally, right? I think one of the things we can do when approaching him is knowing what he wants and what he's good at, and the way he approaches governance. And he wants the people that he deals with on a day-to-day basis to treat him with some degree of deference and respect.
Yeah.
And many other countries have managed to do that. India's done that. Many other countries in various other areas have done it as well. How South Africa is going to be doing that is going to be interesting. I know we are putting together several effective parties to go talk to the US. But I think trying to forecast what he does is probably one of the most impossible things that you can do in modern finance.
Yeah, I definitely think you've summed that up perfectly. Thank you so much for your time, Albert. Really, really appreciate it. And of course, looking forward to all the details that the finance minister fleshes out in tomorrow's budget. That was Albert Botha, head of fixed income at Ashburton Investments.